See, you are well aware of the statements, what you need to prepare. You have to prepare a statement of profit or loss. You have to prepare a statement of financial position. Here, statement of changes in equity will not be there because this is only applicable when you prepare company financial statements, and that is the next topic which you're going to start sooner. Okay. And then you will be given adjustments and you need to adjust them, and I will be asking questions to you because you have already done final accounts in your intermediate. You may have some good idea about this. Let's see a question here. Activity 1, technique demonstration. You have been given the information below and asked to prepare accounts of mug for the year ended 31st December 2007. Trial balance is given to you. Capital account, rent, inventory. This is your opening inventory because it is 1st January. Like opening inventory is a part of COGS, you already know, or cost of sales. Electricity, insurance, wages, trade receivable, sales, repairs, everything is given. And motor vehicle at cost, accumulated depreciation, opening balance, and then everything till here. And there is a suspense account also. It's a key thing to remember. Okay, we'll be discussing about this. We have to see whenever a suspense account is given, that means the trial balance is not matching, and there's a difference between the hello. Okay, were you able to hear me? Hello.
No, sir. Now
Hello.
I'm able to hear.
Yes, sir.
Yeah, I don't know. There was a like a connection loss, maybe some internet issue. So again, I'm starting with this. You have been given the information below and asked to prepare the accounts of mug for the year ended 31st December 2007. Just a second. Trial balance as at 31st December 2007 is given. Debit side and credit side. They have given the capital account. They have given rent. You know, this is the credit side has capital, incomes and liabilities, and debit side has drawings, expenses and assets. Okay. And then these are the expenses given to you. Then sales is a revenue or income, credit side, and then you have all this. Then you have discount received income, drawings, petty cash. Okay. And I told you they have given opening inventory balance. Opening inventory balance, when it is given, it's a part of cost of sales. And then accumulated depreciation on the first day of the year is this. This is the accumulated depreciation balance. This is the accumulated depreciation balance. It is a contra asset account that reduces the asset value. And then they have given suspense account. I was telling you, whenever there is a suspense account given and suspense account is showing a balance of 433, that means the debit side total of the trial balance and the credit side total of the trial balance are not matching. And the difference between the debit side total of the trial balance and credit side total of the trial balance is because of the suspense account. This is creating a difference. And the reason why this suspense account has formed, we will see right now. That means why there is a balance here and in the suspense account, we will see the reason for this, and we need to close this suspense account. You should understand this. We need to close this suspense account. Read this adjustments given. See, I will be asking to you. You should be answering me about these adjustments. Okay. And based upon that, I'll be doing the adjustments. It's a very good opportunity given to you, and it's like, you know, you can take this as a interactive session. Now, So there we go. Just read these adjustments. They have given the closing inventory, and this is a part of cost of sales. You already know this. Fine. Then next point, what they have given to you, Mug has drawn a has drawn $10 a month, and these drawings have been charged to wages. See, drawings has been charged to wages. It is a wrong entry, so that we have to do the correction. So when Mug has drawn $10 a month and these drawings have been charged to wages, we have to remove from wages and we have to include in drawings. Okay. So that drawings will increase and the wages will decrease. I will ask the journal entry for that. Depreciation is to be provided at 25% on the cost on motor vehicles and 20% on cost on furniture and fixtures. So you have to calculate this depreciation, and this is the current year depreciation. Then they have given irrecoverable debts totaling 37 was to be written off. You have to write off this one from the receivables and show it as an expense in the SOPL. You already know this, right? Because you have already done this all in your intermediate. $180 received from a credit customer was correctly entered in the trade receivables account and created to bank account. See, when you get money from the customers, and then you have to reduce your receivables and write the amount in the bank account, right? So we will see that also. And okay, 180. See, 180. See, listen, please. 180 received from a credit customer was correctly entered in the trade receivable account and credited to bank account. Fine. This is also given because they are asking to prepare journal entries to record all this. Mark has taken goods from inventories for his own use. This is also drawings when purchased by his business. These goods cost 63 and they would have been sold for 91. Again, this also we need to adjust. Annual rental of the business premise is this, and 180 paid for electricity in August covers 12 months to June 2008. Contra entry of 73 has been recorded in the trade receivables account. That means this contra entry is what? Where you have recorded this $73 contra entry in the trade receivables account. You haven't recorded this in the trade payables account. That's the reason why suspense account has got created. One of the reasons. See, contra entry has two accounts to be affected. One is receivables account and one is payables account. So entry has only been recorded in the receivables account but not in the payables account. So you need to do that adjustment and then you can close the suspense account. Okay. So just read this once again and we will go ahead with the journal entries and treatments. See, first journal entry. Lishika, can you tell me what is the first journal entry? Closing inventory valued at cost amounts to 647.
So cost of sales debited to closing inventory.
See, this is closing inventory. It is value. Yeah, see, closing inventory valued at cost amounts to 647. What is going to happen here? This closing inventory is going to increase your inventory or decrease your inventory? It is going to increase your inventory, right? So inventory to cost of sales, correct or wrong?
Yes, sir.
Your cost of sales is going to decrease and your inventory is going to increase, because this
Increase.
you are going to again put into your inventory account, or you are going to show in the asset side of balance sheet. 647, 647. So this will be going in the SOFP and this is in the SOPL, statement of profit and loss. First entry is done. Next entry. Mug has drawn $10 a month and these drawings have been charged to wages. See, if it is $10 a month, we are preparing the accounts for the end of the year. So 10 into 12 is $120, right? This has been, charged to wages. So do you think drawings you can show in the wages account? No. Charge to wages is nothing but they have been added to the wages account, which has increased the wages account. So increase in expenses debit. So we need to decrease the wages account. And this has not been charged to drawings account, and drawings account is always debit. So we need to charge it to drawings account. So we need to rectify this entry. So what will be the correct entry? Drawings account debit to, come on, tell me, wages account.
Wages account.
Yeah, we have to credit the wages account. Why? Because we have already debited the drawings amount in wages account. That is not a right treatment, it's a wrong treatment. You can't put your drawings amount in the wages account. So you need to correct it. So you need to decrease the wages account, which is nothing but you have to put it in credit, decrease in expenses credit. You have to increase the drawings account. Increase in drawings is debit. So 120, 120. Please make a note of this entry, please, fast. I'll move forward. If this is done, shall I move forward?
Yes, sir. Done.
See, depreciation, they are saying, is to be provided at 25% on cost on motor vehicles and 20% on cost on furniture and fixtures. See, depreciation is an expenditure, okay, and it has to be credited to an account called accumulated depreciation account. We have already studied this in the tangible assets chapter. So the entry would be depreciation account debit to accumulated depreciation account. Why we are doing this? We are opening an account called accumulated depreciation account. We are going to put all the expenses in this account, and then we need to deduct this from the assets. Okay, so you have to take into consideration both the assets. This is the motor vehicles at cost, and this is the furnitures and fixtures at cost. And this is the opening balance of accumulated depreciation, 435 and 166, right? Yes or no?
Yes, sir.
Yeah. See what happens, like if accumulated depreciation amount is given on the date, on the first date of the year, okay, so if you find out the depreciation, what will be the depreciation we need to check? Okay, so you take this 1740. This is the opening balance or closing balance?
Opening balance.
Opening balance. That means the accumulated depreciation has been subtracted from this, and this is the balance at the end of the previous year, and this is the balance at the beginning of this year. Come on, tell me yes or no.
Yes, sir.
This is the balance sheet of beginning or end? Oh,
Beginning, sir.
no, 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 no. This is the end of the year balance sheet. How it is beginning? Trial balance as at 31st December 2007 is given. This is at the end of the year, right? Now you will be finding out the depreciation. So accumulated depreciation is at the beginning And depreciation is at the rate of what? 10% and 20%. It is straight line or reducing balance? Straight line. So directly you have to apply the percentage. Are you getting my point? See, depreciation is calculated on what basis? Asset value into the rate of depreciation. So 1740 into what is the rate of depreciation? 25%. Come on, calculate and tell me. This is for motor
435.
vehicle. Yeah. And 830 is the furniture picture, and into that, into what is the percentage of depreciation for this? 20%,
20.
right?
Yes, sir.
20%. Come on, tell me the
It's
values.
166.
1
66.
and here
435.
435. When you add this to how much?
So
Come
6
on.
not 1.
601 is the current year depreciation expense for you. Okay. Come on, calculate this and keep it. We'll move forward. This is the opening balance. I'm not denying the fact. We have to find out the current year depreciation, and we need to show that as an expense in statement of profit or loss, and the percentage is given to you. It is applied on the asset value. Asset values are given to you here. Did you do this calculation? Shall I move forward? We'll put the
Yes,
entry
sir.
here. Write down the entry: depreciation to accumulated depreciation. What is the entry here? 601 is the expense. Accumulated depreciation 601. That is a combination of 435 and 166. Okay. This is the entry: expense account debit. Okay. Let's move forward now. This is done. Irrecoverable debts totaling 37 are to be written off. What is the journal entry for this, Lishika or Mahavish? So you have to show this as an expense, right? So increase in expense is debit, and it is going to decrease your receivables account. Decrease in asset is credit. So irrecoverable debts account debit to receivables account. 37, 37. Make a note of this. So 4 journal entries we have finished. More 4 are left over. Shall we move forward?
Yes, sir.
See, 180 received from a credit customer was correctly entered in the trade receivables account and credited to bank account. See what is happening. This was a correct treatment, and the other treatment is not a correct treatment. See, when you receive the money from credit customer, listen please. When you receive, see, my point is, I'm asking your journal entry. When you receive some amount from your credit customer, what will happen? Your receivables account will decrease, right? It will be in the credit. And what will be in the debit?
Cash.
Cash or bank. But what have they done?
Credited
What
to bank account.
they have credited to bank account. It is a wrong treatment. It's an error. We have to rectify this error. Because of this error only, your balance sheet is not, your trial balance is not tallying because of wrong credit. So we have to debit this. So what would be the entry? Since it was credited to bank account, it's a wrong entry. We have to debit the bank account. Am I right? To correct? Yes or no?
Yes, sir.
Bank account debit. And you already have been given a suspense account, right? Which is having a balance of 433. So we need to remove that. We need to clear that suspense account. This suspense account is only because of the errors happened. The error which has happened is wrong, credit in the bank account. Actually it should have been debited, but they have credited. So the other entry would be to remove the amount from the suspense account. So I'll put to suspense account. Everyone please tell me, do you understand?
Yes,
Yes.
sir. Sir, here why did we get suspense account in credit?
See, the other entry would be what? Your suspense account is carrying a balance of 433, right?
Yes, sir.
So that amount balance have to be removed. Isn't it so?
Yes, sir.
And that balance is in the debit. So we have, if we credit the suspense account here, this will cancel out that much balance from the suspense account. Correct or wrong?
Yes, sir.
Yeah. So bank account debit, this is all, this is there in rectification of errors. If you have not studied that chapter, you will face problems. But I am explaining you this very clearly. Your suspense account is showing a debit balance. We need to clear that balance. So that debit balance can only be cleared. How it will be cleared? A wrong credit has been done to bank account, correct? So we have to debit the bank account. We have to remove that from the credit and we have to add that to debit. Correct or wrong?
Yes, sir.
That will happen twice. So it will become 360 here. 360 here. Why it is happening twice? You are removing from the credit side. Correct or wrong?
Yes, sir.
And you are putting it in the debit side. So, and debit entry is what you are doing the correction entry. So that will become how much? 360. Come on, tell me yes or no.
Yes, sir.
Yeah, removing from the credit, putting in the debit, and again doing the correct entry of debit. So that will make 360. So now we will remove this 360 balance from the suspense account. Make a note of this entry fast. We'll move forward. First, see, first thing is you will remove from the credit side. And then you are receiving cash also, right? See, please listen. You have put this 180 in the credit side. That was a wrong treatment. You have to remove from that. For that you need to put for that you need to debit, and again you are receiving the cash also. You have to show that also. So you have to write the amount two times in the debit. Shall we move forward?
Yes, sir.
Yeah. Now coming to the next one, Mug has taken goods from inventories for their own use. So what will happen when purchased by his business? These goods cost 60 and they have been sold for 91. See, what is the right treatment when you take or withdraw goods for your personal use? Drawings, right? So
Yes, sir. Drawings to plan.
drawings account debit to purchase account. 63, 63. Write down. Debit drawings is debit balance, and from purchased goods only you are removing the goods for your own use. So purchase, if increase the purchase balance increases, it is debit. If it decreases, it is credit. If this is done, we'll move forward.
Done, sir.
Okay. Okay. So see, first of all, they have given some rental expense here also. Rental expense. Yeah. They have given a rental expense of 500 in the trial balance, and they are showing that the annual rental of the business is 600. That means 500 we have paid, 100 we are supposed to pay. Correct or wrong? 500 we have paid, 100 we are supposed to pay. Is this outstanding rent? Come on, tell me yes or no. Yes.
Yes, sir.
What is the entry for outstanding rent? The expense is increasing by $100 and liability is also increasing by $100. You can write to accruals account or outstanding rent account, anything. We generally put accruals account because this is the generalized account for any kind of outstanding expense. Okay, so write down the entry: increase in expense, increase in liability. And this will also be shown in the liability side of balance sheet again in the future. Shall we move forward if this is done?
Yes, sir.
Next one, annual, this is done. 180 paid for electricity in August 2007. This year, in the month of August, you paid $180 for electricity that covers 12 months to June 30th, 2008. Say this year ends by what? This year ends by 2007, December 31st, right? Next month's rent you have paid in this year. Next month's rent you have paid in?
This year it's prepaid.
Hello. This year, see, this year's rent is okay. 180 is paid for electricity in August, covers 12 months to 30th June 2008. This year rent you have to pay, no doubt. But next year's rent, if you pay this year, it is called prepayment. Am I right? Next year's expense paid this year is prepaid expense or not?
Yes, sir.
They paid 180 in August. If we if we see this, 6 months rental of this year and next year's, just a second, just a second. Okay, so see, 180 paid for electricity in August. See, this year starts from Jan 1st as per the question and ends at December 31st. However, 180 is the rental we have to pay, right? Can you do this one thing? 180 divided by 12. Can you tell me how much it is? It is 15
15,
dollars,
sir.
right? That is, yeah, if I
Yes, sir.
divide this $180 evenly throughout the year, it is $15 per month. So if you are paying this rent of 180 in August, which covers 12 months to June 2008, this year 6 months, This will be the rent you will be paying, right? It will not be called as prepaid rent. Why? Because this will be this year's rent. Is it right or wrong? Sorry, electricity
Yes,
charges.
sir.
Yeah, that will be this year's electricity charges. Just a second. That will be this year's electricity charges, but next year's electricity charges which you are paying in this year is nothing but the prepaid electricity charges, correct?
Yes, sir.
Yes. Yeah. uh, where is that? Yeah. Where was I explaining that? Yeah. So $15, so 15 into 6, 90 for this year, 15 into 6, 90 next year's prepaid. So we need to adjust this prepaid or not. What is the journal entry for prepayments? It is an asset, right? You are paying in advance. So
Prepayment account.
yeah, prepayments account debit 90 to electricity expense, because the expense is decreasing as you paid already in advance. So decrease in expenses credit. Okay, make a note of this entry. Is it done?
Done, sir.
Contra entry of 73 has been recorded in the trade receivables account. So you have you have only recorded in the trade receivables account, but you did not record in the trade payables account. Is it right?
Yes, sir.
So what would be the journal entry? You have recorded the receivables account. So receivables to you have recorded the receivables account, but did not record in the payables account. Receivables to payables. So suspense to payables. Is it right? No. Payables to suspense. Is it right?
Yes, sir.
Yeah. Just a second. The entry I will show you. So it is payables to suspense. Okay. So adjustment for contra omitted from trade payables. So you have only recorded that in the receivables account. You need to record in the payables account also, which you haven't done. So what you will be doing. So what was the can you read the entry question? Just a second.
Uh,
A contra entry of 73 has only been recorded in the receivables account. Contra entry has two accounts here. It will be affecting two accounts, receivables account and payables account. Is it right? And already we have been shown the debit balance of suspense account. Did they show debit balance or credit balance? In the trial balance, they have given the debit balance or credit balance of suspense account.
Debit, sir.
Debit. So we need to we need to adjust in such a way that it should be removed. So we have to put the other entry in the credit. Correct or wrong?
Yes, sir.
Yeah, so for that the entry would be trade payables to suspense. So in suspense, buy trade payables, correct or wrong?
Yes, sir.
Yeah. Already balance brought down is given, debit balance which is 433, which is brought down, which is given. Already we have done the adjustment number 5, whereby I have already explained you about the bank to suspense. They have credited in the bank account, it was wrong entry, so we debited, and I already told you why two amounts. So that will come in the credit side of suspense account, that will remove 360 balance of 360 balance of suspense account. And one more question, one more thing we have seen here. Contra entry of 73 has already been recorded in the trade receivables account. So that has already gone in the trade receivables, but that did not go in the trade payables. Okay. So contra entry is nothing but reverse entry. Correct or wrong?
Yes, sir.
So other reverse entry has to be put in which account? Payables account. So payables to suspense. Correct or wrong?
Yes, sir.
See, payables is credit, receivables is debit. But contra entry, reverse accounts. So payables to receivables, it is correct entry. So the other account which is going to get impacted here is in receivables. You have done it correct. You have recorded in the receivables account only, but payables account you did not record. So this contra entry will reduce the payables account, right? So I'll put the payables account in debit to suspense account. So payables to suspense. So in suspense account, by payables, it is going to remove the entire amount from the suspense account, and suspense account is no more now. Understood?
Yes, sir.
And this cash, this bank will be shown in the balance sheet, and this payables will be shown in the balance sheet, because these balances these balances are to be shown. Okay. So all these were the journal entries which you have learned till now. Now the task is to make the statement. So shall we make the statement now? Yes. So I'll put it here. You already know that your revenue is, or your sales is 15,542. Let's take this. We have taken cost of sales. Will start with opening inventory. Opening inventory. Purchases, some amount is given, 9876. Any returns in this? I think there was some adjustment regarding drawings, which we have withdrawn some goods, right? 63. Yeah. So we will subtract this 63 from here. Drawings, because we have withdrawn goods, right? So the balance is this, and closing inventory already we have this. We should show in the asset side of balance sheet and subtract from cost of sales. So we are subtracting from cost of sales. Your balance is this, and from revenue, when you remove this cost of sales, the gross profit is 5866. Now see till here. Any doubts you ask me? Just a second. Now this is done, and then discount received is an income, and we have to add incomes to gross profit. This is not, see, we can just check the credit side of the balance. We have 129, add that to this, and you have the operating income, we say this. Okay, then you have expenses which you need to remove. What are the expenses given? There is see wages already you have that included in your cost of sales. I think they have taken wages and salaries here. Let me check it out. Yeah, I think they have taken here. Yes. See, if I take wages, it will be cost of goods manufactured. So I will not be taking that there. And see, electricity you can take, insurance you can take, wages you can take. So we will take all those expenses. We will take electricity. You already know there is a like prepaid expense of 90. Come on, tell me yes or no.
Yes, sir.
So 90 prepaid expense you have to remove from electricity. You have this electricity expense. Insurance 120. You have insurance 120. Wages 1634. You have 1634. We have taken. And about wages, we have seen some entry. I think there is a okay. Yeah, Mug has drawn $10 a month, and these drawings have charged to wages. So 120 we have to remove from wages because it's a part of drawings. I removed this. It's drawings. Okay. There are two adjustments related to drawings. One is in the wages and one is already we have seen in purchases. So these two amounts we need to put in the drawings account. In future we'll do that. Then comes other expenses. Other expenses are your repairs. There is no adjustment to this. Directly it is taken. And then depreciation already we have calculated, which will come here. We already know this. Travel and entertainment expenses is also given. 192. Take this. Irrecoverable debts have to be written off. We have already discussed. That is 37. We can take this here. So, and you already know that for rent we had an outstanding rent of 100. Correct? Yes or no?
Yes, sir.
Because it was 600, right? So we have
Yes,
to
sir.
add, we have to take 500 and take 100 here, and this has to be shown in the asset side of balance sheet. The liability side, sorry, liability side of balance sheet, because it's a liability, outstanding accruals. So this is all done. We have discussed this also. Everything here is discussed. We need to go for balance sheet. So this is the asset amounts which is given to you. Motor vehicle, furnitures and fixtures. Okay. Accumulated depreciation. What is the accumulated depreciation given? Just a second. This is the okay. Yeah. Accumulated depreciation 435. This is the opening balance, right or wrong? And this is the motor vehicles accumulated depreciation closing balance. See what is the account here? Accumulated depreciation account by balance brought down 435. This is in motor vehicle, and then accumulated depreciation account by balance brought down 166. Wait just a minute. So this is the accumulated depreciation balances. I already have explained you the journal entries regarding this. It was depreciation to accumulated depreciation, depreciation account debit to accumulated depreciation. It was 435, 435. So an accumulated depreciation by depreciation, 435. It makes 830, and this is the balance, to balance carried down. Same comes here, balance brought down 166. How much is that? We calculated, right? To become 332. To balance carried down 332, 830, and this will balance the account.
Plus 870.
870. Okay, right. Sorry. 870. Now you have to subtract the total depreciation from the asset value. The previous balances and the current balance. When I remove this, my asset value comes to this 870 and 498, and total amount is 1368. So this is the asset value. Inventory, closing inventory we can write. Trade receivables, already you know that you have to subtract the bad debts. So 635. Prepayments already we discussed, 90 will come here. Cash and bank balances, see already they have given some data in the book. They have a petty cash balance, they have a bank balance. So these two would however be there. Where is that? Okay, we are doing this and there is a bank balance. Yeah. So 5 petty cash, 762 already, and 360 we know that there was a wrong treatment done, created to bank account. So we did the right treatment, and 360 cash balance, right? So this comes to 1127. This we did the suspense account entry, you remember, right? Yes.
Yes, sir.
Yeah, here we already wrote 360. And then comes the total of current assets, and you know this non-current asset 1368 and all this 3867. Now capital profit, the profit for the current year is 2146. It should be added to the capital account, added to capital, and drawing subtracted from capital, right, from this profit only. So added, and drawings already there is a balance of 1200 given, and then some adjustment 63 and 120. Already you know that some purchases you have done, and some you have already shown in the wages account. It was a wrong treatment. So totally your drawings is 1383. Correct or wrong? We already discussed, and we already have done the adjustment for that. 63 in the purchases, and then again some drawings, some you have withdrawn the goods. Okay, so that you have shown in purchases, and wages account there was a 120 which was shown in the wages account, which was a wrong treatment. So we have removed from that, and we have added to the like correct account. Okay. uh, so it is not like some entry you have passed, you have done a like you have by mistake you have posted there. So this is what is the capital account. And trade payables 700 minus 73. Why this 773 you are removing from here? Hello.
Because it was recorded in the receivable account and
Yeah.
not in payable account.
Yeah, so very good. Suspense account we have already done. Excellent. We have done the suspense account. They have recorded only in the receivables that contra entry, but did not record in the payables. So we have to remove this from the payables. Okay. So we remove from payables. 627, and then accruals. Already you know the outstanding accruals is like 100. Outstanding electricity expense we did, right? Sorry, rent, I think 500 paid and 100 was outstanding. So this comes to when you add all this, 3867. Your asset side is 3867, your liability side and equity total is 3867. Your balance sheet is tally. Liability and capital, I would say rather. This is the end of the chapter. I want you to go through this completely, and any questions if I get, I will try to send you from the Kaplan text or kit. I'll send you the text itself. You do the questions if you find anything. Okay. Let's start
Sir, I have one
tomorrow.
doubt.
Sorry.
I have one doubt, sir.
Tell.
So here in the cash and bank balances, why did we add the suspense amount, sir?
Cash and bank balance. You did a wrong treatment, right? Bank account, there was a debit, right?
Yes, sir.
Bank to suspense. So in suspense by bank. So you have to put, when you did a wrong thing, you have to do a right thing.
Yes, sir.
You have to add to the bank balance. If I'm writing bank in the debit, that means it is increasing the bank.
Yes, sir. Then why didn't we add in payable?
Come on, what was the entry for payables? Trade payables to suspense account. So trade payables account has to be subtracted. It is going in the debit. Liability is decreasing if I put in debit.
Yes, sir.
Is it right or wrong? If I put bank in the debit, it should be added to bank account. If I put trade payables in debit, it should be decreasing the trade payables account. Decrease in liability is debit.
Yes, sir.
Understood, Lishika? Or any doubts?
Understood, sir.
Yeah. So this is what. So tomorrow we will start introduction to company account. Now I will be going with these three chapters. Okay. My target. Thank you.